It's always so good to come back home and to see so many old friends. And we are getting just a tad older. 10 years doesn't seem like a long time, but there's a lot more white hair in the people I say hi to today than before. But it is nice to come back. We come home every holiday season. We were home at Christmas for a couple of weeks. Got to spend some time with my family. As Amanda mentioned, my daughter's with us today. Our family's about to grow by one any day. Jennifer said if I threatened to move back to Nova Scotia, that day may come today, but hopefully soon. And now I get to come back for tonight's big event with the Nova Scotia Insurance Women's Association, an event that unites our entire industry in the pursuit of two simple goals: wine and cheese. And before we get to the wine and cheese, while I still have your sober attention, I wanted to make the most out of our afternoon. And I want to share some of the work, as Jennifer said, some of the work that we're doing across the country, but of course here in Atlantic Canada on behalf of the industry. So let's start by taking a look at the sort of the big picture financial results for our industry over the course of 2018. And it's a good thing, A, that you're sitting down, and B, we may want to take the wine in before I get to these results because they're not particularly good. Comparing the first 9 months of 2018 results to the same period in 2017, we see deterioration in all aspects of our industry. Combined loss ratio increased from just over 99% in 2017 to 102. ROI was down low, was lower, and ROE fell quite substantially. Natural catastrophes were largely responsible for the underwriting loss, and that's clearly indicated by the sharply higher loss ratios for the property lines. We saw everything last year: wind, wildfires, and flooding. In total, we're looking at close to $2 billion in insured cat losses, almost double what we experienced in 2017, and an increase in an already troubling trend. And I should add that the results for 2018 did not include any large losses from Alberta, which is usually the country's leader in NatCat. So the $2 billion could have been significantly worse had we had, a normal Alberta season. As a result, I believe it's crucial that IBC's strategic priorities reflect and respond to this period of financial challenge. As an organization, we need to focus on the things that keep CEOs up at night. And that's why we've been advocating for a whole-of-society approach to confronting the risk posed by the increasing number of natural disasters. And this is not just a government problem. This is a problem that we all have a role to play. Flood risk, for example, can most effectively be reduced if we bring everyone to the table: industry leaders, Indigenous leaders, and officials from all levels of government. Together, we need to make the right land use planning and permit decisions. We need to stop putting people in harm's way in higher risk locations, and we need to stop rebuilding them in these same locations. And spreading that message is important. That's part of the reason why we helped to organize a national roundtable on flood that was hosted by Ralph Goodale, Canada's Minister of Public Safety and Emergency Preparedness. IBC now sits on the National Advisory Council on Flood Risk and chairs a national working group on the financial risk of flood. Just 2 weeks ago, I addressed a meeting of federal, provincial, and territorial leaders in Edmonton and proposed a number of options to address the financial risk of overland flooding. Our involvement will continue on this file as the FPT ministers have asked IBC to define high-risk properties and assess different high-risk insurance pool models. They also committed to holding a national flood symposium in the spring of 2019 to advance work on the flood file. The symposium is intended to review best practices related to flood mapping, data, and science. And we also recently introduced a report that sets out a framework to measure the return on investment for green infrastructure. Taken together, these initiatives represent a tangible effort on the part of our industry to encourage better planning, better policy, and a greater awareness of the challenges posed by our changing climate. So that's one of our priorities, and we know that because it's important to our member companies, and we see how it affects your bottom line. Another priority is auto insurance reform, working to create competitive and sustainable auto insurance markets. Again, it won't surprise you to hear this is another challenging issue, one that varies in scope, in detail as you travel from coast to coast. So I'll start with what appears to be a bit of an opportunity first. In British Columbia, we have as an organization become increasingly vocal in advocating for competition in that province's auto insurance market. BC drivers pay more for car insurance than anyone else in Canada. We've done public opinion research that shows overwhelming support amongst BC drivers for ending the provincial monopoly and allowing new entrants into the marketplace. We're finding a welcoming atmosphere for our message about the benefits of choice, and that's the message we're going to keep delivering. A message that real competition means lower costs, better service, and greater affordability. In Alberta, the situation is increasingly difficult. In the first 9 months of this year, 99% of private passenger vehicle insurers in Alberta had a combined loss ratio of 100% or more. Some are even operating with ratios as high as 129. In other words, the crisis continues, and so does our work to try and stabilize that market. We've engaged with government on a number of fronts. We've made our case with passion. We've made our case with math. We have stressed the gravity of the situation and the dire effects of the rate cap not only on insurers, but absolutely on Albertans. Frankly, we're headed for a cliff in Alberta, and when this happens, no one wins. Not governments, not industry, and certainly not consumers. Now, I saw this slide this morning for the first time, and I had to chuckle, because I've gone off that cliff before, here in Atlantic Canada, as Jennifer mentioned earlier, several times. And it's true, nobody wins. Governments don't win, we don't win, and certainly consumers don't win. So we continue to work in Alberta to pinpoint cost pressures and outline potential reform scenarios. So we're fully prepared to engage with whichever party happens to win the next election, which we're expecting at any time. On to Ontario. You know, when I used to work here in Atlantic Canada, I used to complain that all IBC ever talked about was Ontario Auto. All I ever talk about is Ontario Auto. It's the gift that just keeps on giving. There in Ontario, we've been meeting with representatives of the new government. We've been making our case for real reform so we can better serve our customers and, frankly, put an end to a 30-year dysfunctional system that has been broken for far too long. It's all about supporting and encouraging meaningful pro-consumer change to a system, as I said, that is in dire need of it. And we think the new government's stated desire to cut red tape could be an opening to encourage a modernized regulatory system. And just last month, the government announced public consultation. They're asking for feedback from consumers and businesses on how auto rates could be stabilized and maybe even reduced. And now on to Atlantic Canada. In Newfoundland and Labrador, we're playing an active role in the province's review of their auto insurance system. Our efforts have been bolstered by a recent report from the Public Utilities Board, which found what it described as, quote, significant shortfalls in the current system. The report confirms what the people of Newfoundland and Labrador already know, that rates have skyrocketed in recent years. It also confirms what insurers in the province also know, that as high as premiums are in the province, they're not covering the cost that insurers are incurring. In order to bring real change, a $5,000 cap on minor injuries is needed, in addition to other improvements to the insurance system. There are, of course, things in the report that we don't agree with. But the need for change to the auto insurance system and the fact that a $5,000 cap will produce the biggest relief to the system is consistent with our assessment and the PUB report. And now it's up to the government to make the change. At IBC, we launched a consumer campaign to take our message directly to the people, and we're engaging with government to ensure our industry's perspective is well understood, especially when it comes to accident benefits, repair and replacement of vehicles, and rate regulation reform. We have fought this battle before in Newfoundland. 15 years ago, I spent more time in St. John's than I did in Fall River, where my mail went. And maybe during the Q&A, I might have an opportunity to expand a little bit more on why the lawyers in Newfoundland have been as successful as they have been for so long. But I digress. And I'll get excited if I get talking about it now. In New Brunswick, we're getting to know the new government and engage in talks on potential reform. We know that claims pressures are rising there, the same way that they're rising in other provinces, and we're hopeful that progress can ultimately be made. In Prince Edward Island, the market is stable and things are in relatively good shape, but we know that it's always important to remain vigilant. As an aside, the island is shaping up to have a rather unique dynamic when it comes to auto insurance in the years ahead. On the one hand, like most jurisdictions, PEI will see a growing number of semi-autonomous vehicles as technology develops. On the other hand, the island is also experiencing a rise in the number of horse and buggies on its road, thanks to 3 growing Mennonite communities. It's kind of like a Back to the Future movie all at once. And finally, here in Nova Scotia, we're focused on working to change the system in 2 key areas: rate regulation and the cost of injury tort claims, both of which have been rising, which has been rising steadily since 2010. A scenario we predicted when changes were made to the product back then. Sometimes you hate to be right. This was one case where we're not necessarily pleased that we were right. Here and elsewhere, we know that brokers are feeling the pinch as well. From 2014 to 2017, I was just looking at some numbers that Amanda's team put together. From 14 to 17, claims costs increased in Nova Scotia by 30%. Claims frequency is relatively flat. And ROE last year was a minus 13%. So clearly not a sustainable situation for the industry. Most recently, IBC submitted to government a proposed methodology for a closed claim study, which I think was just recently approved. The goal would be to pinpoint where the pressures are coming from and use that information to chart a better way forward. The government has stated its intention to review the auto insurance system, and we intend to play a role in working to influence the outcome of that review so that our industry's consumers are well served. So at IBC, we have other priorities for 2019 and beyond: combating insurance fraud, encouraging a greater focus on innovation policy amongst governments, and urging balanced market conduct regulations are all part of our key priorities. I'd be happy to talk about and answer any questions you might have on those, or to dig a little bit deeper into any of the auto files during the upcoming Q&A session. But it's clear to us, as it's clear to most of the industry, that auto insurance stands apart from all our other priorities as our most urgent policy imperative today. And my message today to you is that you're not alone. There are challenges across the country, and change is needed from coast to coast. And we have every intention of staying active and vocal and advocating for our industry and the people it serves. I've used this phrase before with some of my team, something I picked up years ago from a friend who said, "What interests my boss fascinates me." And for those of you that work for insurers, your bosses are interested in auto insurance reform, and me and Amanda and everybody else at IBC is absolutely fascinated by it as well. So it is clearly our #1 priority in 2019. Okay, so I want to recap in terms of what we've talked about so far. I've talked about our financial results, which weren't great. Then I lightened the mood by talking about the state of the auto insurance market, which also isn't great. But I got to tell you, every day I really am heartened by the resilience of the people I meet in our industry. And every day I'm encouraged by your dedication and your creativity. And every day I feel confidence growing about what the future for our industry can hold. So with that in mind, there is one other priority that I did want to discuss with you briefly today. So at IBC, we're squarely focused on the future. In our discussions with decision makers, we talk about the challenges that lie ahead, but also the opportunities that await if we're able to get the regulatory balance right. We are all witness to a world that is changing rapidly. The pace of technological advancements is breathtaking. Since the start of the century, the iPod has come and gone. We live different lives than we did 20 years ago. We communicate differently. We receive and pay our bills differently. We buy things differently. Think about it. We all grew up watching TV on TV. And we also watched the TV shows when the TV executives told us we would watch them. Teenagers today would be dumbfounded by that kind of an arrangement. But here's the thing. Despite all this progress, the regulations that govern our industry haven't changed much. In fact, many haven't changed at all. I was talking recently in Ontario with a regulator who's come back into the business. He's been out of the regulatory field for about 15 years. He's a senior regulator in Ontario. Just came back into the business, and he said the first thing that struck him was the fact that nothing has changed about how our industry is regulated. He said, I would have expected at least a modicum of change after 15 years, but nothing has changed. But I can tell you consumers want change. And regulation should be flexible enough to allow it, maybe even to encourage it. Because innovation is an essential part of a truly competitive environment and a prosperous society. That's the positive message that we're taking to regulators and policymakers in every province and territory. We tell them that ours is an industry filled with innovative thinkers, people and good ideas. Give us the freedom to adapt to the world as it is and as it's becoming. We live in an era of ride-sharing services which are certain to have an effect on car ownership, especially amongst young people. We live at the dawn of the autonomous car, which is certain to alter both our traditional business model and our traditional definition of risk. And we know what our customers want from us. We've done the research, we've had the conversations. They want more choice and more customization, just like they get from the other companies in other aspects of their lives. They want the way in which we communicate with them to evolve with the times. They want fresh thinking, not just from us, but from government and regulators as well. Above all else, they want to be protected from risk, but not from change. As we stand here in Canada, we're falling behind other countries. In the US, there's Metromile, offering a pay-as-you-drive insurance policy that is popular among young people living in urban areas. There's Esurance, offering a full online insurance experience. There's Lemonade, offering a full online experience with the artificial intelligence capacity to resolve a claim in 3 seconds. Meanwhile, our insurers still have to send out certain documents in the mail, regardless of a customer's preferences. I swear that our industry keeps registered mail alive at Canada Post because nobody else uses the service. The whole experience is a bit like driving a car with an old GPS. There are new roads, there are better roads, there's a quicker way to your destination, but your car can't lead you there because it's working with old information. Now, to give credit where credit is due, Nova Scotia is the first province in Canada to approve the use of electronic proof of insurance. It's also the first province to acknowledge, in the new Traffic Safety Act, the need to properly insure vehicles having automated features. Those are two innovations and forward-looking changes. But our industry as a whole is still working in a regulatory system that's cumbersome. Now, I'm not saying that regulation alone is putting us at risk of falling behind. In a number of ways, our industry needs to step up its game and take better advantage of the opportunities that do allow for innovation and new ways of doing things. But the U.S. experience shows us that there are consumer benefits associated with a more principles-based and technology-neutral regulation. Today's consumers see new ideas and new solutions all around them, but in Canada, at least, they don't see enough of them from us. They want new and better services, more customization, an overall experience that's closer to the ones they get from the apps on their phone. They want things like the ability to arrange all their insurance matters online and hold all relevant proof documents on their mobile device, if that's their choice. The ability to turn on and off their insurance coverages based on when they drive and when they choose instead to bike, walk, or take a trip. The ability to pick and choose the insurance benefits they want to buy, the kind of customization I was talking about earlier. The ability to influence their insurance rates by sharing data from their vehicle to demonstrate their good driving habits. Now, these are just a few examples of what consumers have told us. But here's the common thread, and one of the biggest challenges that we face in Canada. We can't provide most of these products and services because of regulatory restrictions. We simply can't deliver everything that our customers want from us. It can feel as though we're in a fight of our lives and we have one hand tied behind our back. And so our positive message to decision makers is clear. We are a regulated industry, we always will be, and frankly, we always should be. But regulators need to adapt to the world as it is, not the world as it was. Stale regulation supports the status quo. It acts as a disincentive to progress and better ways of doing business and serving customers. As an industry, we need to put ourselves in our clients' corner and emphasize that we are acting on their behalf, in their interest. Because to be candid, we have a long way to go here in Canada. We're not asking for protection from competition. We don't want preferential treatment. We seek only the freedom to adapt and innovate, to use the ingenuity of our people to create a better way of doing business. We seek the opportunity to lead the way in creating change and a new way forward. In essence, we're trying to create a win-win-win scenario. Governments get credit for creating a more consumer-friendly marketplace, consumers get better insurance solutions, and we get the opportunity to innovate. Ladies and gentlemen, there will be challenges and changes to our industry in the years ahead. We'll continue to bear witness to the impact of familiar challenges and new technologies. The responsibility for creating a modern insurance regulatory environment falls to others, but no matter where we operate, we have responsibilities as well. We must be ready to change and adapt. We must be eager to meet today's consumers and tomorrow's on their terms. We must be willing to invest in the kind of new ideas that fulfill expectations and make lives better. If we focus on this kind of innovation, if we are allowed the freedom to exercise our ingenuity, then we can define the future of our business and shape its future success. Thank you very much.